Hey, welcome back everyone. Thank you for joining us for part 2 of our Momentum Trading webinar. For those of you who missed part 1, don't worry, it's not a prerequisite, but you can go back and view a recording of part 1 whenever you want. We covered a lot of great topics in that one, so I suggest that you go back and review it. Just some quick intros. I'm Mike Sedek. I head up retail trading for Lightspeed, and back with me today is our presenter David Shine. As most of you know, Dave is a Wall Street guru. He's also the founder of ShinesTradingRoom.com. So Dave is going to pick up pretty much where we left off last time, discussing more crucial topics for momentum traders. I want you guys to please feel free to ask questions as we go through the presentation so we can keep this really interactive. We'll try to address some of your questions as we go through the presentation, and anything left we'll take at the end, and we'll do a separate Q&A session at the end also. So if you have any questions, just type them into the webinar chat box. Please keep in mind this webinar is for informational purposes only. This is our mandatory disclosure. Nothing presented today should be construed as investment advice or recommendation by either Lightspeed or our presenter, David Shine, to buy, sell, or hold any specific securities or engage in any specific trading strategies. And of course, this webinar will be recorded. We upload everything to our webinar library, so if there's anything you miss or you want to check out part 1, just go to lightspeed.com/webinar. Okay, so we have a lot to cover today. I'm not going to take up too much time. I'll turn the presentation over to Dave. Dave?
Hey, Mike. Thanks a lot. I want to, as usual, I want to begin by thanking Lightspeed and yourself for making this possible for me to come on and to pass on some of the knowledge that I've gained over the past 15 years in the marketplace. And this is the second part in a multiple series of lessons that I want to pass on to you guys to be able to take advantage of. Learn from somebody who's been in the trenches, who deals with it. Like I always say, I am not only the professor, but I'm also inside the trenches, doing the trades and trying to pass on whatever knowledge I've gained through my experiences throughout the years onto everybody out there. I want to also make sure that everybody out there knows when we do a seminar or a broadcast or webinar, I'd love for it to be interactive. I'd love for people to be able to ask every question that's on your mind. Now's your opportunity. Usually these courses are expensive. Usually they're in huge bundles of people, and you don't get a chance to interact directly with us. And today I'd like for people to really feel comfortable to interact and to contact us through chatting in any of the questions that you may have. Remember, your questions are everybody else's questions. So whatever you guys are on your mind, it will help you, it will help others, and feel free to ask them. You can write them down, you can chat them in, and we're going to get right into the broadcast. I know very often we run short on time. Education for me and what I pass on to people is not a one-day event. It's not a hour or 45 minutes worth of event. It's an ongoing educational process, mentorship process. At times, everybody, including myself, needs to be brought back into line. I need to repair myself. When I make money, sometimes I make money 20 days in a row. What happens by the 21st, 22nd day? I'm already, I think that I'm invincible. I call it the invincible complex. And I always need to get brought down to earth. I always need to repeat my mottos, repeat my lessons, teach my lessons to others, and have people be able to do the same for themselves when they get to that level of trading. So we're going to get right into the broadcast. You guys see the screen right in front of you. We put together, my team here at ShinesTradingRoom.com put together a very nice presentation to get out some of my points. We're going to get right into the action. Yes, it is part 2. That's me. There we go, right up to the slide where we left off from the last class. As Mike said, you could also go back to the Lightspeed website to be able to check out our first class also. This is a discipline conversation, and the question is, as you go back to this slide, the question is, are you the chosen one? Okay, I want people to feel that they respect this business and understand this business, and understand what type of opportunity they have ahead of them if they can conquer this business. Remember, everybody's objective out there, at least the traders that I teach. Objective is to be as consistent as possible. It's not about hitting a home run one day and striking out in massive failure the next day. Consistency, foundation, fundamentals. Are you the chosen one is the question here. What do I mean, are you the chosen one? Quick background about me. When I went to become a teacher, and they told me I was going to make $20,000 a year, I said, hold on, I got to try something else. I want to see if I'm the chosen one for this thing called stock trading. This is in the mid to late 90s. And I went into the office, and you know what? I was gifted and blessed to be able to continue to do this awesome business over the past 13, 14, 15 years, and be able to capitalize on it year after year. The way that I accomplished that, the way that I made that happen, is that I listened to these rules, and I found myself being the disciplined individual. I found myself identifying and putting together my list of rules, my list of ideas, of concepts that I need to follow, make sure that I'm following them like a disciplined individual. Okay, how many people out there, raise your hand, are you guys the one that you feel like you're a disciplined individual? Can you control yourself? Are you the person that goes to, and we have a lot of these sort of comparisons, and I know that, you know, once again, the disclaimer goes out, there's no comparison between the casino and trading, but are you the one when you do go to Las Vegas, do you come with $500 or $1,000 and just lose what you have, or are you the person that's crawling around on the floor looking for any loose chips after you lose your 1,000? Do you go to the ATM machine? Are you looking for a Western Union from a friend or family member? You know what? That's what trading's like also. Trading's about being able to be controlled, disciplined, focused at all times, and that's in so many different levels. You know, very often for me, the hardest part is to sit on my hands. You guys also, right? Sitting on your hands, sometimes it's the hardest thing to do. You always want to be in a trade. Is that discipline? No. Discipline is about being able to sit on the sidelines and focus. We're going to get into some of the exact specific things that go through my mind and your mind when I'm trading. The things that I want to be able to control and I want to be able to discipline myself to achieve. So we're looking to be disciplined 100% of the time. What happens if you're disciplined 85% of the time? And that 15% of the time that you're not disciplined, you let all the marbles slip out. So you make money 3-4 days in a row. You make out of the 5 days a week, you make money Monday, Tuesday, Wednesday, even a half of Thursday. Guess what? Thursday afternoon, it's not your type of day. You have the discipline to control yourself. That are you not going to give back too much during that Thursday afternoon and that Friday on your trading? Listen, this is real. This is the real thing. I do it every day. It is the real lesson, the real idea of you needing to be able to be disciplined to control yourself. Because if you don't control yourself, that 15% of the time, it can wipe out 85% of what your gains are. And we definitely don't want that to happen. Some of the tips of discipline are to be flexible, nimble, not stubborn in so many aspects. Okay, some of the rules I'm going to get into today. We talk about the Shine Eye Bible. A lot of people come to me. They love the discipline. They love the mentorship. They also want to know in literal translation, how do I control myself? How do I protect myself? How do I make money? What do you do to make money? I'll tell you guys what I do to make money. Part of the list that as part of the things that I put together on a list over the past 10, 15 years, it's called the Shine Eye Bible of Trading. And as I mentioned in on this slide, it is a seminar in itself. And when you have the this list of rules, and I've seen traders literally put it on their hands, put it on their screen, write it down on their palm, put it there in front of them. I want you to be able to combine a few things. The Shine Eye Bible, the planets that all need to align, and yourself being that disciplined individual that makes sure that you're rating these trades properly in order to succeed in this business. This all goes back, we're still talking about discipline and importance of discipline and how important it is to combine all those factors. In my Eye Bible of Trading, and I'm not going to get into a full seminar of it, but I just want to touch on some of the main ideas, the main focus. Remember, this is the second class, so we give a little bit more of the meat and potatoes of getting right into what I look for. Okay, very simply, strong stocks, I'm looking to buy those stocks. Okay, I'm looking to, and you see down here on this slide also, I'm looking to buy strength. I'm looking to short weakness. Very easy, right? How many people out there, and you raise your hand if you need to, and we don't see you, but you have to tell yourself this. How many people out there are the ones that you feel like you're a contrarian trader? You know, I've met people, and Mike, I'm sure you've seen them before also. I've met people that consider themselves contrarian traders. That means that they're going to go against the grain, and they're going to try to get that stock that's the weakest stock in the market and try to buy that stock whenever they can. They're going to try to short the one that looks like it's screaming out, and they're going to get in front of that. Listen, guys, everybody out there, you need to quit that, okay? I go for the easy money, the low-hanging fruit. It's so much easier, a strong stock that continues to rally throughout the day. If you look down on the bottom of my screen, I've just put this, this slide together. This slide on GMCR right here, yes, this is today's chart. You have multiple opportunities here. What do you see? I see trends, okay? I see patterns developing. Remember my motto, right? Remember my philosophies. Trading is all about patterns, okay? It's all about mathematics and patterns. I see patterns developing. Remember we talk about Neo sometimes, and Neo from the Matrix. So when you see these patterns developing, are you taking advantage of these patterns, or are you going against the grain in the patterns? Okay, so for example, beginning of the day, GMCR, stock, one of the weakest names out there on the screen, turns the corner, starts rallying up, develops at the beginning, and I think you can see my mouse over here. So if you see over here, develops an uptrend, continues to rally higher, another little pull-in, continues to rally up, another little pull-in, continues to rally up. Guess what happens then? Starts developing a downtrend for the next 2 hours. Okay, what is that called? It's a pattern. How many people are trying to buck these patterns, are trying to go against the grain and say, oh, GMCR in this rally, I'm going to short it, I'm going to short it on the next, short it on the next one. You know what? Depending on your time frame, we're going to get into time frame in a little while, you can capitalize. I love to go with the easy money. I love to go with the flow. Let's look at from 1 o'clock on. 1 o'clock on, hits this level, once again, double or triple bottom down here in this level right below 44. Then guess what? Continuation of a pattern. Many people follow these in channels. These are uptrending channels. This is also just a strengthening, strong stock, strong pattern. Didn't make the stock up, just clipped it off the Lightspeed charts from today, and see this pattern developing. I love getting all over these type of patterns, strong and stronger and stronger. How many times do you want to do this trade? How many times do you want to hop on the pattern? What's the answer, everybody? How many times do you want to be on this pattern?
Every time.
Every time, as many times as possible. Okay, let me ask you a question. You go to Las Vegas, and I ask this question a lot. You go to Las Vegas. If you get into the casino and you make money 80% of the time that you go, how often would you go? Every day. If you see a pattern developing, do you want to hop on that pattern? How often do you want to do that pattern? As many times as it takes to do that pattern. Many people are saying, yeah, Shine, right. What happens if the pattern goes against you?
Yeah,
right?
Dave, that's what I was going to ask you. You know, look at the chart at right around 10 o'clock when the pattern breaks. You know, what indicators are you looking at to tell you that, you know, maybe now is the time to get out? Or at what point do you say this pattern is broken and it's no longer in an uptrend, it's reversed?
Excellent point. I always look at it. This, first of all, from 9:30 till 10, 10:15, it looks like there's a perfect uptrend here, right? Many people draw these channels, draw these trend lines. Right here, you have a break of the trend line, breaks out of that channel, continues to break lower. Either a person may say, hey, I'm not buying it because it broke out of that level, or since it broke, guess what? You answered your own question. It broke. If it broke, what do I want to do? I want to potentially look at this stock for weakness. Was the market weak today? Sure it was. Do I want to look at this time for a potential pull-in? Sure I do. Do I want to hop on this trend? Sure I do. When do I want to short this stock? I want to short it when it pops its head up. Why? Because those are the rules. That's where the easy money is. For me, that's why I hop all over. I look for these pop-ups. I look for these little rallies in a weak stock, hop all over it, take that trend the whole way down. Here it reverses again. So it gets out here. You either look at this like a breakout above these levels, potentially right here, reverse it, or you know what, don't trade it for a while. Maybe here is too much of a chop. That's okay also. A lot of times you don't have to you know, be in a trade at every single time, but now it definitely starts developing an uptrend over here. You know, as you guys know, we have a live trading broadcast where we talk about things developing in the marketplace in real time. And when you see these things in real time, it's not you look at it later on as a Monday morning quarterback. You see this happen. You see this development. You see this breakout above these levels, pulls back in, confirms potentially above even these other little peaks over here, and then the stock's off to the races. And I know people on it. I know people are trading it. I know people capitalized on it. That's where the easy money is. You're going for the easy money all the time. Hate to see people fighting the trend and going for the hard money and going to try to, capture on a trend like this, trying to capture a short because you want to short it every time. It's just not the way the market works. It's just not healthy for your trading career. Back to the discipline. That's what's important. I'm going to go over to another quick chart. This is today. Guess what, guys? Same thing. Same idea, right? First of all, this $24 level, let's talk about a couple things in detail. We're talking in detail again about my trading, what I'm looking at, any information I can pass on to you guys. BBY, first trade of that day for me, held this level above 80. I bought it. I sold it right before the whole number, capitalized on that trade. Watch a little bit of the chop here. Guess what it does? What is this level on the second pop-up? That's 99 cents again. Are you kidding? You're going to go back to the same level. You're not going to break through that whole number, and you're going to get to the same exact level. Guess what? Another good short over there. Talked about it on the live trading broadcast. Pull in over here 30, 40, 50 cents on a $24 stock. What is that, 2% in a quick blip? Guess what it does? Goes back up to that whole number again. You know what this ugly little red thing is over there? How many people feel the pain of that ugly little red blip? That is the blip. That is the blip trade. I've called it the blip trade. What that does is the market gets you out, and what it does, it runs the stops. I'm not sure what level everybody is out there, whether you're advanced or you're novice. They're running the stops. They're pushing this thing because everybody's watching above $24 level to potentially get stopped out. So if it blips through, and once again, a blip is like a, just pops right through. It squeezes all those people through that short level, through that area where the stops get triggered, trades up to 24.08, I believe was the high of the day, and never sees that level again. How do we trade that? What can we do, guys, to anticipate that? I've been using a phrase recently, and you ready for me, everybody out there? The anticipation of the anticipation. Okay, many people anticipate that. They get in there, 99 cents, a very simple anticipation. First time it works, second time it works, third time what happens? You know what? I'm going to anticipate the anticipation. This time maybe I'll take a little bit of a smaller position. I know that there's a chance when it gets up here that it blips you out. What do I want to have done? I want to have some offers out up there. I want to have some offers out above $24. I want to have some tight stops above those offers because if it goes through, maybe it's actually a confirmation and a continuation. So once again, I'm limiting my downside. I'm anticipating the anticipation, okay? The first level of anticipation is for the person who's not listening to this seminar. The second level of anticipating the anticipation is for everybody on this broadcast today. You get up here, the thing pops through the whole number, 24.08, never sees that light of day. Who wins that? The person who's anticipating the anticipation. You have a couple cents higher, you have a real tight stop, goes to 24.08, continues a downtrend the rest of the day. The point of this was actually to show you a downtrend. Look how beautiful that downtrend is. What do we do with downtrends? Everybody, repeat after me. Literally, repeat after me. You have a large audience on today. Repeat after me. What are we doing with this downtrend? We are shorting this weak stock in a weak market when it pops its ugly head up. Stock pulls in over here. What is that, 50, 60 cents? Back up to 80. Doesn't get through 80 a couple times. Back down again to 40. Pops back up to 75. What is that? That is a rally in a weak stock in a weak market. Stock's been weak recently. Had some news came out yesterday. Got totally trashed yesterday. A name that right in my power alley, Shine's power alley. All over it. Hop on this. Hop on this. All these little pop-ups. As much as you think that that's maybe a reversal, the easy money for me always says go with the trend. Until something changes, this is what I want to hop on. The more I can anticipate the anticipation, the better I do.
So, Dave, I have a question for you.
Go.
This is a stock you traded today?
Yes.
Okay. So on a chart like this, how many times you yourself for your own trading are you in and out? How many of these little moves that you're showing us are you capturing?
You know what, Mike? We're going to go into a identify what type of trader you are. And I've seen it so much recently. People come to me for like Wall Street therapy, and they say, "Sean, what am I doing wrong? I knew 2 days ago Deckers. I knew 2 days ago Goldman Sachs was definitely going to go lower. I just couldn't get it on the trade, and I put it on, but then I got stopped out right away." And a lot of times, a person out there needs to identify whether they are a day trader, a momentum trader, a swing trader, a hyper scalp trader, a swing a couple days out, 2, 3, 4 days, 5 days even, a longer term trader, or maybe at that point you would even call an investor, a couple weeks out, a couple months out, different types of traders. This chart does not matter on whose time frame you're looking at. Get rid of that stuff on the bottom that you know is actually just today. If you get rid of that at the bottom of your screen, this could be an overall chart. And we talked about it last time. Some of the charts we're looking at, you don't know what time frame it is. This could be long term. This could be a chart of RIM, right? On a longer term chart, this is RIM. Ending up right down as 52-week lows today, and then we're all familiar with RIM, the BlackBerry. So this is a chart where this, this pop over here, this may be a week's time. And during that week time, smart traders, myself, I'm looking to short this thing potentially on a longer scale, piece into that position, anticipate the anticipation of it, get in towards the top, and continue to short this thing and hold on to that. For me, I do capture these smaller moves on a day trade where I create alpha. Okay, I create alpha on a daily basis. I do have my longer term swing trades, and I do have my options account also to be able to enhance my overall macro and micro picture. And what I just said is so important to all you guys out there to identify which trader you are, right? So I identify those. I split those trades up into different accounts. I create alpha in my day trading account where I want to make $500, $1,000, $2,000, $3,000, $7,000, $21,000 in a day, not have any exposure in that account overnight, and come back in the next day and do the same. And hope that my longer term strategies also end up playing out. And that's what a multi-strat strategy idea concept is. A multi-strat fund potentially as long-term, short-term, different asset classes, different time periods, depending on how fast you are, depending on how nimble you are, depending if you're using the Lightspeed platform. You can capture these type of small moves of these 20, 30, 40 cents, capture 40 cents on as many times as you want to do it, and until the pattern fails, it stays intact. And that's what I love about trading. Patterns, they hand it to me, I feel it, I absorb it, I react to it, I take advantage of it. Most important, I anticipate the anticipation. So yes, I do capitalize on these little pops. There was, multiple trades every day. I find opportunities like this. That's the beauty of our business, is you could find and you could capitalize on these trades. There's something every single day. Don't get frustrated. Don't get upset that you missed it today or you didn't have it today. Today was your type of day or you should have. Mike, experienced traders, guys who have really seen some really large figures on our screens. We get calls at the end of days, depending if the market had a huge rally. It's usually at the end of a huge rally. And people want to know, oh, you must have killed it, you must have crushed it today. At times that's frustrating for us. It's frustrating for other traders out there because maybe that's not your type of day. But you know what? Making sure you're in business, making sure you're sitting on the sidelines, making sure you're flexible and nimble, making sure you're protecting your downside is what keeps people in business, to be in business for the next day, because there will be another opportunity. I don't remember the last time I've ever seen a market where there wasn't one opportunity or two opportunities on that given day. These days it feels like the markets are so, there's tons of opportunity. It's a treasure chest of opportunity. There's so many stocks moving and breaking out and pulling in hard and just moving, giving us the two main important things that we need in order to make a successful trade: liquidity and volatility. Okay, I'm not going to go into detail on that right now because I want to get on to some more information. But I'm going to go on to the next slide, try to get through some of these ideas. Obviously, we will continue this series of education for as long as it takes to make all you guys out there as successful as you could be in this business. Some of the tools to make it work, and I'm going to, right here, I'm focusing a lot on many of the Lightspeed products that they offer. I like to talk about it in a macro picture also. People come to me all the time, and they may talk about it. Hey, Sean, do you use this and do you use that and do you use a crazy something and you do some words I never even heard of. Here's my recommendation for people, right? Use as many tools as you possibly can without it overloading your brain. If it does, eliminate one or two of those tools. Okay, I'm going to get into something fairly quickly now. We're going to try to zip through some of the planets that need to align for you to identify if that's a trade for you to get into or not. Okay, let's talk about some of the planets. Okay, is the stock weak or strong? Is the sector the stock in weak or strong? Have you identified your time frame on that stock? Now remember, your time frame on a winning position can stay longer than a losing position. So you have to identify your risk reward on the trade depending on what type of trader you are. A person on a day trade for me, I may lose 10 cents in order to make 50 cents. The same trade on a longer term chart for me, a longer term trade, may be a dollar loss in order to make $10 to the upside. As long as I always have the risk reward and I'm able to punch out my trades when I'm wrong and I hit that max loss, then I'm all about that trade, and I'll do as many of those as possible. So we're talking about multiple things at the same time here. If I'm going too quickly, if you guys have any questions of what we've talked about already, please type them in now. I actually force you into typing them in. We see everybody's name out there, and it'd be a shame if I had to call on you to type in a question. Type them in. I want to hear from everybody. So just talking about some of the tools, some of the planets that need to align in the stock. Is the stock weak or strong? Hey, Mike, do you color code if something is positive or negative for the day?
Absolutely, and so do all our traders.
So, absolutely. It's part of the technology to be able to hand you simple things like trends and charts and pluses or minuses next to the name, or greens and reds. If you can't grasp the plus or the minus, we'll make it into greens and reds for you.
Yeah, I mean it's a simple concept, right? There's so much information flowing through everyone's desktop, especially under trading terminals, that it's impossible to read every single number, and coding everything to either red or green for positive and negative gives you the easiest way to track the actual trend.
So start there. So start at that green. The green, the stock's up 1%. You're potentially looking at the volume, making sure that there's enough volume in there to precisely transact the scenarios that I've talked about where there's liquidity and volatility. Remember, if there's no liquidity, how are you going to transact? It's going to be a lot more difficult. The spread's going to get wider. You don't want to be part of losing that massive spread on a stock. So you want to have things that have liquidity but can move. So you're in that space. You see something green. It's up 1 or 2%. It's continued to grow. Potentially you may have a mentorship program there talking about the market gaining strength. Other sectors. That's the next word I'm going to use, sectors. Certain spaces that gain strength. Certain things that show standout to you. For me, I always like to look for the leaders. I always like to look for the strongest names. Listen to this, guys. Write this down. Listen to the seminar over and over. The strongest names in the strongest sectors on the strongest days when they pull in at the best possible price, not an okay price, the best possible price. And an okay price will beat you up every time. An okay price makes you punch it out at the bottom, or your stop goes in and gets activated where I'm looking to buy that thing. Goes back to the anticipation we just talked about. But it's that clear of a picture that gets painted. Then you're looking
hey,
at
Dave, sorry to interrupt you. How are you calculating, how are you tracking which sectors are positive and negative? What's the best way that you're doing that personally?
Personally, besides obviously what we do and listening to the environment, I use a lot of the Lightspeed, different sector watches, different filters. I look on the left. You have a ticker alert. There's a high-low ticker right there. If you see some of the names coming across, are they in your space? Are they in your sector? Can you look at a sector overall? Mike, do you have maybe you have some other tools that I don't even use it? You have such a robust platform that it might be some of the features that I don't even use, but I use these as sectors. Then I'll watch ETFs in those spaces to see what they're like. For example, guys, I don't know if you saw the gold and silver names today. What a bloodbath on those. One of the weakest sectors on my screen. An area for me to focus on, and to see some action, activity, volatility in these names, and continued weakness throughout the day in some of those names. But you have, there's just so many things that you could attach.
Yeah, I actually just answered this question. It came up in the chat too. But a lot of our active traders are just setting up multiple watch lists within Lightspeed Trader based on different sectors, or at least the leaders in those sectors, or as you indicated, maybe in the ETFs. And you can easily just flip between those different watch lists, or you have them up the whole time on multiple layouts, different screens. And again, a lot of it is just tracked by color. So when you see one of your watch lists lighting up in green or another one lighting up in red, that's your sector moving up or down.
Excellent. There's just so many tools that you could have, and we actually started by saying if you have too much stuff, you want to try to avoid that also. Your brain gets overloaded and you can't function properly. But just once again, back to my philosophies of the planets aligning. Once again, strong names, strong market, strong sector, strong space, strong direction, strong trend, S&Ps, S&P futures, the NASDAQ, the Dow, the tech space, and so on. Overall, sellers, buyers, level 2 setup, market maker setup. I want to see all those things. I want to see this momentum building to the long side. I want to anticipate that momentum and which direction that's going to go. And I use all these tools that are here, filters, charting. At times we talk about pivots. We talk about market sorters. We talk about filters. We talk about anything that you could use. All the tools at your disposal. Please take advantage of them as much as you can. I hate to see people one-dimensional traders these days. I don't like one-dimensional traders. I like people who have a philosophy, an edge, an idea, a concept, something that they can slap into an Excel sheet and see the performance and see that they're doing the right thing at certain times on certain trades, and that's what's working for you, right? This whole game is about a diary, patterns, performance. What do you do best? What do you do? What's your worst trade? What's your best trade? And some of these tools will really help you do that, and you have to be able to use the ones you can to make your trading as good as it can be. Scanners also. I love scanning the market for opportunity. I listen to my environment. I listen to what's out there. I find different scenarios and different opportunities at all times to be able to say, hey, that's just become weak. I want to watch that. Here's another tip of the trade, right? Another inside scoop on how I see things. In my mind, I always want to have 4 strong stocks, and I always want to have 4 weak stocks. Why? Because if the market goes lower, I'm shorting the weak ones. If the market goes higher, I'm buying the strong ones, and that's it. How am I finding those? Once again, I'm going back to some of the features, some of the Lightspeed features. I'm taking a look at some of the strength, some of the weakness, different spaces, different sectors, and that's what I do. That's where the low-hanging fruit is. Once again, guys, avoid being those people. Avoid being the people that go against the grain. I'm going to find the strongest stock. 1999, I believe the stock was maybe Millennium Pharmaceuticals, MLNM. I had about 4,000 shares for a quick 7 points. I made about $25,000 within the first 45 minutes of trading. I went home, probably played some miniature golf or something or other, big lunch. I don't know, but I went home afterwards. I didn't trade anymore that day, and I saw on the screen, I turned on the TV, and I saw that this stock was up now another 22 points or something like that. My point is 2 things. One, obviously in our lessons we talk about maximizing your profits. If there's another 22 points on 4,000 shares, it's another $80,000 or $90,000 I left on the table. Besides that, how many people out there end up becoming those people that say, wow, the stock's up 7 or 9 points. I'm going to start shorting it here because I think it should be up less. You know what? I hate those people. No offense to anybody out there. For me, that's not a style. It's not a strategy. For me, it's that easy money, that easy direction. And the point of the story is that the stock that people potentially thought was going to go down was up another 22 points at the end of the day, because in their mind and in your mind, that thing might be it's up too much. I always hear that, it's up too much, and that's it's just not a philosophy that I follow. I like to go with the trend until the trend betrays me, and then I'm out. Once again, charting, filters, pivots, market sorters, just some names. I try to identify new names, new ideas. Once again, I look for trades and stocks and names. People say, what type of names, what type of trades do you trade? I look for names on stocks that I can trade, not that trade me. How do I know if it's trading me? Because if my performance is not working, then it's trading me and I'm not trading it. So, that's a super valuable thing. Once again, it's as simple as looking at your trade blotter. Once again, on the system in front of you, on your Lightspeed, you go in front of the trade blotter, you see how you've been doing. If you were up $500 that morning, and now you're up $400, you've given back $100, and once again, it's in our 25+8 rule, which we discussed in the first seminar, but you've given back that amount. The question is for you, are you trading well or trading that stock well, or is it trading you? And the answer is probably it's trading you. What do? Step away from the table. Step away from the chair. Find that discipline inside yourself to step away and to be able to come back when your timing's right. And good traders always get back on the right side of the trade. When you're on the wrong side of the trade and your momentum's wrong, remember again, momentum wrong, take a breather, take a break, walk away. Mike, how are we doing on time?
Why don't we go another 5 minutes or so, and then we'll start taking questions.
Okay, let's do that. Identify your time frame and skill level. Okay, this is so important. Everybody out there, these days, I'm telling you this, these days, if you try to combine a day trade and turn it into a swing trade and a longer-term trade, and you calculate a 3-day trade where you think this market may roll over or go lower, and you're anticipating that, but you're trading during the day on a day where we're strong because you're doing a day trade and you close out your position at the end of the day. You don't have that opportunity to hold it for these overnights, which these days so much money is on the overnight where we see these huge gap ups and huge gap downs, which is another lesson on its own, how I trade the gap ups and gap downs. If you don't identify, you try to cross over those two, the short-term trader and the swing trader, and you break that barrier between those, you can end up in a really bad place. And I see that a lot these days where people don't identify themselves or separate themselves from day trader to swing trader, and then you become an investor. So something goes against you, and your philosophy is, I will hold my losing position as it goes against me. So I was looking to make 30 cents if I was right, or 50 cents if I was right, but now the stock's against me $1.25 and I continue to hold. It's against my philosophy. It's against what I believe. I identify those different time frames. I identify if I'm a novice trader, if I'm a beginner, if I'm an intermediate trader, if I'm an advanced trader, if I'm a long-term veteran. I don't care which trader you are. You still need to identify what your time frames are. And I've seen the best of the traders out there being able to call certain trades and certain stocks in certain areas, but actually executing those trades is a whole nother skill set, and it breaks down to identifying whether you're a swing trade 3 days out, 2 days out, 5 days out, 2 weeks out, or if you're a momentum trader and you want to capitalize on that short-term, mathematically advantaged trade that we continue to talk about, we continue to teach time after time, trade after trade. Okay, so markets are very competitive. People out there, everybody, it's like getting into a competition. It's like starting a race, starting a marathon, poker hand, playing poker against other people. It's like going into battle. Who's on the other side of your trade? A lot of people say that person is your nemesis. Why? Because where you think it's a buy, that person, if you're going to get filled, that person thinks it's a sell. Are you using all the tools? We just talked about a lot of tools at your disposal. You're using all the tools. Are you using Shine's rules, the Shine Eye Bible, to help you? Are you taking advantage of whatever your leg up you can get on your competition or your nemesis? You better be, because they're out there to do the same thing. Can all time frames win? Theoretically, yes. What does that mean? That means I buy a stock today, and it goes up 20 cents, and I had bought it from somebody who sold it to me down at the bottom of this pull-in that I talk about. Somebody sells it to me. I bought it. The stock rallies up. That person may have sold it down there or sold it to me where I bought it, and they got short down there, but they're holding on that longer-term time frame we just talked about. We're trying to piece together all these different philosophies that you need to master, but you get into a place where a person identifies themselves as a 3-day out, so that person shorts the stock where I'm going long, and that guy waits 2 days, and 2 days later he makes a fortune. But in that time frame, I bought it and I sold it 30 cents higher, and I made some alpha. I created that alpha that we talked about. So theoretically, everybody can win, and that's sort of what makes the market as fair as possible. I look at the market like the fairest marketplace. You know, we talked about comparisons to eBay, buyers and sellers, supply, liquidity, this battle between all the purchasers and all the sellers, and this is what it's like here also. I know I want to have every tool identifying my time frame and beat the other person or make sure I'm taking advantage of that trade. I gave you many tips just now on how to do that. That blip trade we talked about, hopping on those patterns, taking advantage of where the easy money is. I like to have all those edges. I feel that that's what allows for me to be as consistent as I am. It allows for me to be the one teaching this class to you guys. Once again, if you look at the last phrase, a person buys today because they want to do something in the next week, but I want to buy because I think it's going up in the next couple minutes or next couple seconds. Mike, is that the last topic, or should we continue on?
You want to do, how many more slides do you have? Maybe we can do another one or two.
About 60. Let's take some questions, and I'd love to handle any questions or comments that come in from the field.
Yeah, sure. Yeah, let's go through the questions. So, David, you talked about this briefly in the first one, but I think it's important to recap. Can you talk a little about risk and reward? How are you setting your stops, your profit targets? What's the whole mentality behind that? Because I think that's an important topic that we should review.
Not only do I think it's important, I think it should be in every single seminar. It's like a standard slide that should be somewhere in the risk-reward slide and in that topic. So risk-reward for me, this is a blanket statement that I make when somebody says, what's your risk-reward like on one type of stock? I have a standard, and this is for a day trader, momentum trader, active trader, hyper trader. What I look for is I look for a 0.5%. I have a standard 0.5% to 1% rule on the stock. Okay, so for example, a $20 stock, 0.5% would be 10 cents to 1% would be 20 cents of a maximum stop on it. Why do I figure that? Because I'm looking what my risk reward would be on that trade. So if my potential upside in the trade is 50 or 60 cents, now I can't lose 80 cents if I'm wrong. So if I lose 10 cents but I make 50 cents, I have a 5 to 1 reward versus risk scenario. And that's what I look at. I look at a 3 plus times the amount of reward versus risk on any trade at all times. So if there's a potential 10-cent downside and a 50-cent upside, it's a 5 to 1. If I think I can make $1 to the upside, some of these crazy stocks, FMCN these days are moving all over the place. Best Buy, a $20 stock. These things have had some tremendous moves, and that's on a $20 stock. When it goes up to 50, really the same philosophy, stays the same strategy. About 0.5%, which would be 25 cents or to 50 cents of a stop. Let me ask you guys a question out there. When I have a risk, when I have a downside, do you always need to hit that max loss and get stopped out? Absolutely not. What many times what I do is I'll look at every single cent, every single place where the stock is, and I'll reevaluate at that point what the risk reward is on the scenario, whether it be through trailing stops, which once again, in my eyes, and when I train people, it is mandatory to have stops and trade with stops. Trailing stops, what you're doing on trailing stop, you're evaluating the risk reward again. So you're up 40 cents on this trade now. How much of that 40 cents do you want to risk to make how much more? I say, hey, I'm looking at around the same price stock, so I'll say 10 cents. I'll give back 10 cents of this trade in order to make another 40 or 50 cents. We've just talked about what am I doing? I'm reevaluating my risk reward in every single scenario. I hate to have to hit my max loss in every single case. Are you guys out there hitting your max loss in every single scenario? Whether it be risk reward on a small scale, risk reward on a micro picture where you have a risk reward for that morning. And one of the reasons why I trade mornings more actively than lunchtime is because I feel there's a better risk reward. Why is that? Because when you have a defined risk in the morning, so you're in a trade that potentially could go down against you, that same stop, that same 10 to 20 cents, but because it's a volatile time in the marketplace and you're short, I don't know, Best Buy, like we looked at that chart earlier today with a 10-cent stop to the upside, but a 40-cent gain to the downside, a 50-cent gain to the downside, that's when your biggest potential reward is in there. So once again, you're defining your risk, but your reward could be magnified because the volatility in the morning on some of these names is greater than they are in lunchtime most of the time. I analyze my stats and I figure out to myself that during lunchtime trades, that's not when I do my best. So that is something that I want to focus on, and I always want to capture my risk reward and always keep it standard with the ability to be able to adjust on the fly as your system allows for us to do.
Okay, cool. So you talked about how much of a reward you expect to get from a trade. How much capital are you dedicating for each one of your trades? And I guess the best way to answer that would be as a percentage of either your buying power or your total account value, since everyone's will be a little bit different. How are you deciding that?
It's a very good point. It's a very good question. I have a rating system, and maybe on the next the next scale, we're going to rate different trades. We're going to talk about the rating system. But let's just put it this way. On the rating system that I have, and we have a scale, a rating scale, when I see that trade that I am madly in love with, that's when I'm sizing up. When I'm saying sizing up, I would look to have between, I'd say, maybe a third and 75% of my total buying power in on that trade if I identified it as something that I'm madly in love with. When I have a trade and I'm using that same rating scale, we started talking about when the planets are aligning, and the planets all align for me, and I love that trade. I'm using that majority of my buying power. And on the opposite side of the scale, if I see something that's just okay and I feel like I'm chasing something, I have that all the time, first thing I do is I try to have as little of the stock as possible. The second thing that I do is I try to limit that to as little of a loss as I could possibly take, and at times it actually turns into a gain. And that's what keeps me as flexible, nimble, and successful at what I do. So I will max or push up my buying power at times into positions that I'm madly in love with. And then on the opposite side, if I or somebody out there, you don't like a trade, why be in it for so much buying power? Why be in it for it to take a real risk on a trade? And so that's how I sort of scale in my money usage into certain names at certain times. I feel there's so much opportunity these days in $20, $30, $40 names, $5 names. I believe there was a name yesterday, LIVE. I think the stock went from $1 to $6. How much buying power do you need for that? It's all about being nimble, all about hopping on that trend, all about being flexible, risk reward, entries, patience, discipline, all these things we talk about all the time. So do we have any other questions to talk about? Because I don't want to do
sure.
too much at one time. I don't want to overload people's brains, but I do want to try to answer as I think it's very vital for people.
Yeah, we actually had a great question come up in the chat, and this I hear a lot from traders that are struggling. And the question really is, this individual finds themselves in positions that are bigger than what he wanted to get into. So while he tries to remain disciplined, trading a few hundred shares at a time, it seems like a lot of times you end up adding on to the stock and you end up trading some huge positions that are beyond your means. Any simple advice to get people out of that nasty habit?
You know what, it goes back, it touches on many of the topics we talk about, and we will continue to pound this in on a daily basis and however long it takes, but it goes back to many of the things, and first and foremost, discipline, right? So if your fingers are doing something that your brain doesn't tell it to do, you're at a disservice to begin with. So, if your brain says, hey, I don't really love this trade, why am I going to size up huge into that trade? You don't do it. And you have to find the control to do it. And at times I talk about, having some of the guys here at Shine's Room, pay a visit to the person if they need, drag their chair away from the screen if they can't control themselves at certain times, whether it be that your losses are too big or whether you're getting too big in certain positions at certain times. Next thing to do on literal terms is set yourself certain parameters. Say, I'm not going to be bigger than this amount of position in certain trades. If you find a trade that you absolutely love, those are the trades you should have the most stock in. It shouldn't be in every trade. I actually think that you have a huge negative swipe, a huge negative leverage against you if you end up in a position where you have 1,000 shares in, I'm just using an arbitrary number, 1,000 shares in every single trade. I think you're dead in the water. I think if you have 1,000 shares in some trades and you have 100 or 200 shares in other trades, you're actually doing yourself a huge service. So the idea and the goal of everybody out there is to be able to learn throughout time and throughout experience and throughout discipline, is to be able to learn how to identify those most attractive trades that you are madly in love with, using a lot of the philosophies that we continue to teach and pound into people's minds. So when you find those, you need to be able to outsize those larger, juicier, more attractive trades, and you need to be able to minimize and keep a lot smaller in the trades that you don't like. So once again, I feel like you're doing yourself a huge disservice and leveling the playing field against you, leveling my philosophies and not utilizing them against you, because you end up in a situation where you're in 1,000 shares or 2,000 shares in every single trade that you do, and I don't feel like that's an advantage in any way. I think it's a huge disadvantage. So once again, as far as sizing up in those trades, the idea is to pick which trades are the best for you, which ones work the best for you, identify the prettiest ones, and hop all over those with your max size position and everything else, be able to size up accordingly to how attractive you are to that trade.
Okay, great answer. We got another question coming in. This is actually from an individual that was in Shine's room today. He said he's getting a lot of good setups from you guys, which is great. But his problem is that, you know, he seems to get faked out a lot. So he gets into a position, there's a minor pullback, he gets out, he covers, and turns out the pattern, the trend wasn't broken. He ends up losing out on that trade. Any good way to address that? Is it just about getting small until you're comfortable enough and you build up the confidence?
Hey, it sounds great, Mike. You should do the seminar.
Okay, next one's all me.
Okay, thank you for joining us. It's excellent point. I appreciate the plug. I appreciate the continued support, and you know, a lot of the ideas, a lot of the trade setups. I just lost my screen. Mike, do you still hear me?
Yeah, we can still see you.
And you see my screen also? Okay,
yep.
Cool. So for me, and once again, that fake out is the anticipation of the anticipation. Okay, this thing is a chess game. It is a poker game. It is for them to show you the cards or to bet their chips, and them, I'm saying everybody else at the table, which is every other potential trader, which is every other person in the marketplace, whether it's an institution or a firm or a hedge fund or an individual trader or mom and pop or anybody. One of the ideas to do is to be able to anticipate the anticipation. What happens, and what they want to try to do is they want to try to make it look like the worst trade or the worst buy at the bottom. They want to look like the stock's about to go to zero. They want to make it look like at the bottom. What is that called, guys? That's called the bottom. What do you need to do? You need to anticipate that. You need to anticipate through those levels where you think are maybe the first level of support, and maybe you wait to the second level of support. One of the lessons that we talk about, maybe we'll talk about sizing in and out of positions. When you're dealing with sizing, maybe your first soldier, test soldier, we talk about all the time on Shine's Room. Test soldier. I'm putting a test soldier out there. Why? Because I want to feel out the marketplace. I want to see how quickly somebody sells me stock over there. I know that I'm not going to get killed because it's only a test soldier, so it's 1 or 2 or 300 shares. I want to potentially take a look at piecing in a little bit lower again, maybe 200 or 300 shares, a little bit lower. I want to get the meat of my position, maybe 700 to 1,500 shares right down there towards the bottom part, when not only it looks its ugliest, but they've actually put it through one more time, and they blip it through one more time, and they shake everybody out of the trade. So it's about sizing properly. It's about anticipating the anticipation of it. It's about potentially holding off for another second. It's about waiting a little while, being a little more patient, a little more disciplined. Don't hop in right away. It goes back to the last question. Don't size up and being in your full position right away, right at that time. Anticipate, wait, build your position properly, and that's one way to avoid the big hurt. You know, some names that I trade, you know, stocks I was trading today, hey, I was getting in for 200-300 shares at a time, building that position, and then, you know, and I was to the short side most of the afternoon, and when stocks rally up, I'm shorting a little bit. I know they're going to give me some pain. Maybe if you understand it, maybe if you feel it and you understand that they're going to give you some pain, if they give you the pain, are you going to be really in pain, or are you going to be able to use the pain to your advantage? And that's how, for me, I anticipate that. That's how, for me, I avoid getting blipped out, because I get to build my positions the way I want to build them. And so be patient, be able to size in properly and accordingly, and take full advantage of the tools at your disposal. And that's you know, sort of my advice when it comes to getting stuck out and getting blipped out.
Okay.
The trend is your friend.
And that actually segues us into our next question, and probably our last questions, because we're kind of running out of time. You talk about building a position, and the question was about scaling in and out. And I'm assuming that when you're putting on trades, obviously there are more than 100 shares. You know, are you picking your point? Are you saying, hey, I want to be in the stock and I want to have 2,000 shares and I'm buying 2,000 shares? Or are you scaling in and out of that position, building up your confidence? How do you trade?
For me, I do my best to avoid, once again, I avoid the big hurt. And the way I avoid the big hurt is, if something is going to go against me, I want to be in that position for as little size as possible, for as good of an average price as possible. I want to be small when I'm wrong, which allows for me to scale in and out. And if everybody closes their eyes out there, we didn't do one of these during the seminar. We usually make everybody close their eyes out there. Imagine that piano again. Imagine the waves on that piano, the different notes going up and going down. Imagine that chart that we showed earlier today of GMCR or of Best Buy. The waves, predicting the waves, looking, anticipating the waves, and are you positioning yourself properly through those waves where you're feeling it? You may have a core position. You may be short Best Buy throughout the day. You may have 500 shares on throughout the day, but then you're adding up to another 1,500 shares when the core position looks like it's best. That's where I do my best trades. At time I feel like, I'm like feeling that matrix. I'm like playing Mozart on the keyboard because I have 2,000 shares short, stock pulls in, I cover 1,500 of them, stock rallies up, I short another 1,500 again, stock pulls in, I cover 1,000, stock rallies up again, I short another 1,000, another 1,500, stock pulls in, I cover that. All I'm doing is playing what the market shows me, playing what the market gives me, playing the tools that they give me, showing me the patterns that are developing, and that's what I want. And I'm taking what the easy money is, the direction, and I'm flowing through those waves as you need to pick them. You guys could open your eyes right now, but I hope nobody fell asleep during that. But you have to envision what those waves look like, and you must be able to play those waves. And that's how I keep my core position, add piece in and piece out of it. Remember, I want to get in a trade. I want to get out of a trade when I can, not when I have to. It's already too late. Maybe one of the next things we'll talk about playing market maker, how to play market maker. What do I mean by playing market maker?
Yeah, we got to save that one for the next one.
Sure. I could go on all night.
I know you can. All right. Well, look, unfortunately, yeah, we are going past our allotted time frame here, so we'll cut it off here. Dave, obviously, I want to thank you again for a great presentation. I think you did a phenomenal job answering a lot of questions. Guys, if you missed the first series of this, just go to our website, lightspeed.com/webinar. All the recordings are there, including part 1 of what we just talked about. We're definitely going to have Dave back for some more webinars to talk about more of these strategies for momentum and for active traders. So with that, just want to thank everyone. Be sure to check out shinestradingroom.com. A lot of great information being passed around there every single day. Thanks for joining us, everyone. Dave, thanks again, and we'll see you on the next webinar.
Mike, thank you so much. If I could ask you one favor, if you can, maybe clip out a bunch of those questions that are still coming in from the field and hold them for next time for people to be able to have the questions standing by. We could really try to answer as many as we can. We do a lot of Q&A because I know everybody has questions out there, and we actually want to listen to them and want to do our best to help them out. So if you could grab those, I'd love to answer them again next time. I want to thank Lightspeed and everybody for your help, support, participation, and for making this possible. So thank you so much, Mike.
That's a plan. Sounds good. Thanks, everyone. Have a great night.
Thank you. Good night.